Everyone, welcome back to another edition of Superprime UK with your MJ Group specialist Superprime valuers. Myself, Rob Cohen.
Myself, James Wild.
Hope you're all well. It's been another whirlwind week in the UK, in the property market and the economy. Things changing daily with unprecedented volatility and uncertainty in the markets, mainly driven from the new government, should we say, the new Prime Minister with the new mini budget, then the Bank of England's intervention, and wherever we are now, following another U-turn, which we'll discuss in more detail. I've been out and about, as always, back at the universities this week. Super happy to go to my old stomping ground, University of Westminster. Big thanks to them for once again allowing me to speak to all of the up-and-coming young surveyors out there and helping them on their valuation property modules. Really good fun. Love touring the universities, so big shout out there. And on the sporting front, the football was back at the weekend. Had to say a big shout out, disappointingly, to all those Leyton Orient fans. Were unbeaten till the weekend, and I wanted to give them a shout. And the one week I do was the weekend they lost, but they're still sitting pretty at the top of League Two. James, the derbies, how did they go, and what are your thoughts?
Yeah, weekend of derbies, wasn't it? Obviously last weekend. I'm not sure what the sort of most sort of hotly anticipated one of them was, but obviously your team Arsenal, Rob, good win against Spurs. Unfortunately sending off for Spurs, but obviously last season I think Spurs overcame Arsenal, so one of the fixtures when Arsenal had a player sent off. Manchester United, there was quite a lot of, I felt like there was quite a lot of hope in terms of getting a result at City. I think Man United are the team which have got the most points at the Etihad out of the teams in the league, although within that time they've also suffered heavy losses. So it's 6-1, it was looking pretty bleak. Anthony Martial, I think second appearance of the season in the league this season, got a late brace, but hugely disappointing there. United just on that sort of upward curve, that bit of bounce, and then it came at the wrong time. Obviously 3 weeks through the break with the international break. Arsenal still sitting pretty at the top of the table. Can they last till Christmas?
I don't know about that, but City and Haaland looking formidable, and anything or anyone that stops that train will be very impressive. So, what's the data looking like this week? What's it looking like on the ground? Everything's changing dramatically week to week. We need to update everyone on what the market has been doing. What are you seeing out there?
Thanks, Rob. So the mini budget obviously still is making news, a week or so on from its initial announcement. We've had the reversal of plans to abolish the top rate of tax, the 45% rate, earlier this week. Bow to the sort of mounting pressure there, the Prime Minister. Whilst in terms of the data we're seeing, fairly strong instruction levels this week, 432. For the data we have, quite a few price reductions, Rob, as well, 292. So maybe a sign of the market just cooling and coming off a little there. Under offers are strong again, 245, so a good pipeline of sales. And I think the biggest statistic we got this week, Rob, 197 sales this week. So that's one of the best we've had for this year, actually. So a real spike in the data there.
Yeah, I think the market jitters are having a real impact on what we're seeing in the mainstream residential market. And agents are telling us that some deals are being pulled, some purchasers are getting very anxious, mortgage products obviously being taken out of the market. And so there is nervousness out there. At the same time, the ones that are remaining cool and calm are proceeding with their deals, especially if it's something that they want or they've been waiting for, or that there has been very little supply of in the marketplace. And so I think there's always going to be that panic stroke nervousness when you have markets like we've seen in the last couple of weeks. And that's both seller side, people thinking it's a good time to get out, and buyer side, the ones getting nervous and pulling from deals. So what we're looking for over the coming weeks is for the markets to calm. With calming markets, you'll see those that have gone under offer proceeding, and I would hope a large supply of property coming on in the last few months of the year, as is normal at this time of year, where October and November are really strong performing months after the summer recess.
Yeah, no, thanks, Rob. So one thing we have seen definitely is a slight uptick in the number of fall-throughs, and obviously at the sort of sub 2 million mark, there's a lot of more chains in that sort of price bracket, so that's affected sort of more multiple deals there from what we've seen. And like you touched upon there, Rob, some price reductions across the markets, and some sellers increasing urgency in some cases, and some sort of following trend with that market cooling. We have also heard stories, Rob, in the last few weeks in terms of buyers coming across from America and getting sort of seemingly good deals. I mean, amazing deals for them with the currency levels as they are, and the pound being so weak against the dollar. A fairly good recovery on the pound, Rob, sort of a 15% uptick roughly on where it was. It was up to £1 to $1.15. It slipped again the last couple of days, 2 or 3%. So I think we've possibly seen that bottoming out, but we're going to have to wait and see how the global markets and the forex markets react to some of the UK tax changes.
Great.
And obviously, over the last 2 quarters, Rob, the UK economy, whilst we were in some positive growth, I think it's anticipated we're going to slip into at least 1 quarter of negative GDP growth. And we're hearing news that the UK economy has slipped actually from the world's 5th largest economy, losing its place there to India, so now down in 6th place there, we're hearing. So I think it's going to be a very tough few months, especially with some of the fuel poverty we're possibly going to see, in the UK and across a lot of the European countries as well, with obviously the cost of living crisis going to be taking full force.
Yeah, the economy is in uncertain, uncharted territory on the back of historical credit crunch, quantitative easing, Brexit, COVID, fuel, energy, inflation, now interest rates, etc. So where we go from now is very hard to predict. It's the question that everyone wants to know the answer to. Probably everyone listening or watching each week wants to hear the golden prediction of what the future holds for the economy in the UK. And at this moment in time, I'd say all options are open, all cards are on the table. Like James just mentioned, we could be heading into a technical recession of 2 quarters of negative growth, or we could be in a 12 to 18 month decline fueled by, pardon the pun, the energy crisis, inflation, or there could be a deeper long-term recession on the cards. All are available, all options are still out there, and over the coming weeks and months, depending on what happens globally, and more importantly, what happens in this country and what the government do or don't do, will decide our future in the UK. And hopefully and positively, it's one of the first 2 scenarios, and we have a relative period of lacking in productivity and growth, but something that we can overcome and get out on the other side as quickly as possible.
Yeah, no, thanks, Rob. And also, we've got the labour market constraints in the UK, sort of record number of jobs out there, low unemployment, our sort of weak labour force in the UK is sort of not helped the economy there. Obviously, sort of, you could argue Brexit has erected some of the barriers to its largest trading partner, the European Union, which has somewhat deterred some of the business investment and sort of broken some of the connections with a large pool of potential workers. But overall, I think it's the inflationary pressures which are most impacting the UK, which in turn is affecting the sort of the sharp uptick in the UK base rate. Just wanted to talk about rates, Rob. That sort of brings us on to that. The average 5-year fixed mortgage rate now is over 6% for the first time in 12 years. It's only sort of going one way at the moment, really, with more interest rate rises anticipated on, I believe it's the 3rd of November, when the Monetary Policy Committee next meet. So that's the 5-year fixed. 2-year fixeds, these are around 6.1%. So again, Rob, well over 6% for any sort of fixed rate deal at the moment. I'm not sure if a lot of buyers, a lot of people refinancing this moment in time might switch to a variable rate just to try and sort of ride out the storm and then refinance when the after the peak of the interest rates. I'm not sure. I think people have maybe got differing strategies on how to best sort of manage their sort of financial position there. But it's going to be an interesting one, as for the last sort of 12 years or so, everyone's been on those sort of 2-year, 5-year fixed mortgage deals, as they've been the cheapest by far and most competitive in the market.
Yeah, I think it's the hot topic of discussion on all the socials, all the platforms. Every meeting that I'm having with banks and lenders and funding institutions is all around interest rates, what's happening in the market, where's it heading. The reality is, like our economic position, it is unknown at this stage. So what the banks are doing is they're raising their rates and they're hedging against further increases from the Bank of England and the base rate to protect their position, and that has been fueled and really moved quicker following the events of the mini budget and then the Bank of England intervention. So we are heading north and heading north fast at 6% plus. The rates being offered in the market that I'm sure will be somewhere between 6 and 7 following the next announcement in a few weeks' time, as James mentioned. So what does this mean? In the short term, lots of uncertainty, lots of volatility. The mortgage market is going to be challenged, and I think that's going to be challenged for the next 2 or 3 quarters, probably moving into the summer of 2023 and the autumn of 2023. By that stage, depending on what 3 paths we go down on the economy, like I previously mentioned, at that point, if there is a bit of confidence and if we're just gone through a technical recession or a short-term recession and inflation is under control and the fundamentals in the economy are still okay, then we'll see the possibility of that peaking in 2023 and in the future 2024 rates coming down to a level that maybe is more sustainable and manageable moving forward in the mortgage market and from a consumer borrower perspective. And that's a complete moving piece that's rapidly getting quicker on the back of what's happened in the last few weeks, and could be fueling further increases in the short term in order to get a better position in the long term. But there's so many variables, so many economic factors that lead into that, and only time will tell.
Definitely, Rob. And just wanted to give some property news as well this week. Obviously, a good sale of the week this week, Rob. A Hampstead terrace sold for £15.5 million. It's another sort of trophy asset there, selling over in St John's Wood. And just in terms of some other sort of for sale trophy assets, Rob, Branch Hill House in Hampstead has sort of re-entered the market. as it is. Prime development site, just at the sort of northwestern side of Hampstead village. Planning consent for 28 units with a possibility of enhanced planning there on the site there, about 1.7 acres, I believe. It's originally sold off by Camden Council, from which a specific area there of Hampstead, Rob, they sold off quite a number of sites and buildings there across the last 5 years, as we know about. But a prime site there, I think a residential developer is going to go in there and develop the site. It's been a few schemes of sort of more luxury, sort of prime flatted schemes in Hampstead we've seen over the last few years, actually.
Yeah, know the site very well, and as you mentioned, we've valued numerous schemes in that location. Some of the previously sold off by Camden Council, and a beautiful location, very sought after and in demand from developers. So I'm sure eventually when a developer sees that project through, it will be very well received. I think, talking of prime, super prime, and sale of the week, I think the market is still performing, and I think it's one of the big questions we get asked every week: how is super prime? How is prime doing? And I would say it's still performing, and it's going to face a test and a challenge as we move into 2023 and all of the economic turmoil that we're currently facing in the short term. How robust that market is, like James mentioned, it is well supported by foreign buyers and external investment and currency trade-offs, although it does need an underlying economy and a performing UK to support that in the medium to long term. So I'd say at the moment the fundamentals of that market, demand and supply, is performing, relatively speaking, to maybe now the rest of the country. At the same time, no market is immune from global economies and global circumstance, or the more insular UK exposure that one would face. So I think with caution, and at this present time, there is still good activity, like we've commented. Anything else for this week, James?
No, that's it, Rob. I mean, just want to say, in terms of scarcity of some of those super prime assets when they do come available, because of the scarcity and the rarity, it's sort of a once-in-a-lifetime opportunity that a certain asset might become available, and obviously at that specific time, buyers will then circle to try and acquire and compete to buy that certain asset.
Brilliant, James. Thank you so much. Another hot edition of Super Prime UK. I just wanted to have the final shout out. All those ones who did the London Marathon last week, congratulations, especially for the ones running for worthy causes. Great to have the London Marathon back. It was received brilliantly, as always, and it's an important part of the calendar. And it was great to have everyone back in London last weekend, supporting some incredible charities and worthwhile causes. So congratulations, everyone. And thank you, everyone, for listening and watching and following us this week. See you all soon. Thank you so much.
Thanks, Rob. Thanks very much, everyone.